Hello again and welcome. My name is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is August 10th, 2020. It's a Monday. A lot of news happened over the weekend and market moving, real-time related information that we're going to report to you that you might not get on the headline of the day. So let's get right to it, and thanks for watching. Our first topic of the day is Congress fails to act and President Trump uses his executive order to see if he can get the ball rolling again. That's going to be met with a lot of resistance, potentially some lawsuits. But the reality is that Congress didn't get the job done. Now, I was reporting on this and I predicted this and it came true. Shocker. I think all of us had the opportunity to basically say that Congress would use this in their political, sort of political football, chess, checkers, however you want to say it. The reality is that they just didn't get the job done, and they had to. So they're utilizing sort of politics as usual to state their case. But if you think about it, the amount of money that's out there right now, as evidenced in M2 money supply, is at all-time highs. Again, they just re-reported that. So there's also an additional $80 billion in the first CARES Act that Treasury Secretary Steve Mnuchin said that has been unclaimed or undistributed. But Congress, literally, that's a trigger right there for states to actually access that $80 billion, which they want and desperately need so bad. In fact, if you look at all the states, I think New York, New Jersey, Illinois are really hurting, as well as California. So they want access to that $80 billion, but that's locked up in the CARES 1.0, if you will, just to simplify things. So in order for those states to get claim on those dollars, as well as an additional dollars that could be passed, they have to work together to make it happen and sign legislation that frees up that extra, call it $80 billion that's out there. So there is a tremendous incentive. And there's also another report for them to work together. There's another report by Strategist that shows that after all of this stimulus, and if you tank in all the stimulus, a sort of CARES Act, federal government assistance across the United States to all the different states, if you factor that in and you subtract the loss of tax revenue that each state is incurring because of the great lockdown or shutdown here, there's only six states that are going to be worse off than when we were pre-COVID levels, meaning that all the rest of the states are going to actually be fiscally better off with the additional federal aid that potentially could be coming than pre-COVID. And we were in a good economy beforehand. The six states, I'll just give you three again: New York, New Jersey, and Illinois are suffering. California's out there as well. But if they get the federal government assistance, they could have essentially their budgets better than pre-COVID, which is unimaginable to think that they would have the ability to use the federal government's money and all the lost tax revenue that we're seeing here in the state of California, and then put that together. They could be better off. That's not the way this is supposed to work. This is supposed to work where it has to go into the hands of those that need it, and those small businesses that are going to, those families that have the small businesses that are going to lose their business forever. This is a real serious issue. And so that's why there's a tale of the economy and the markets, and those are two different. So let's go into S&P 500 earnings, which is my next topic. And essentially the take-home point here is that the second quarter earnings are coming in. We had over 444 S&P of the 500 companies already report. And essentially most companies were outperforming expectations significantly. And one of the reasons why is the aggregate earnings and revenue were surpassing all expectations. So the earnings were up 22%, and revenue was up just about 2%, 1.3%. So beating on both sides. Now, of course, the estimates were pretty much the lowest you could go. It also shows that corporations, because of technology, because of expense controls, and the ability to sort of meet the consumer, let's say online, in ways that they've never done before, we're actually seeing that play out right now. So the second quarter earnings for the S&P 500 is better than expected, both on operating earnings as well as revenue. So this is another indication that we have, quality management, ability to sort of work through this problem, if you will, expense management, and revenues are still coming in. So the markets are up as it relates to that. But it just goes back to their first story where the consumer itself has the money, And if you think about it, 57% of Americans made more on the federal unemployment enhancement as well as our state unemployment claims and checks and additional bonuses checks that they received. So that net effect of, the M2 money supply is plus 22% year over year, month over month, which is the highest it's ever been in history. That just shows that there's money out there. Corporations are now going to work to sort of, incentivize consumers. I would say the next 6 months are going to see all of these different incentives for consumers to sort of part with that additional stimulus dollars that are in their bank accounts. And what we do know for certain is that if you give $1 to an American, they're not going to save it. That dollar is going to find its way back in the U.S. economy. 2/3 of our economy is consumption based. Obviously, there's a large component that's service oriented. That's not going to come back for a good long time. But if you factor that out, take that out, and you still give that dollar to the U.S. consumer, that dollar will work its way back in the economy, and that's what the markets see. That's what the markets ultimately care about. And so we're going to, as evidence, as strong earnings. And there's your empirical evidence, what markets are watching, paying attention to, as it relates to all things, money related. So we will find out if Congress works together. I suspect this week they'll get a deal done. And the reason why I say that is because the longer they wait, the more people are going to come off unemployment, meaning return to the workforce. And that jobs number going forward, it'll be weeks before we see it, is going to be this moment period in time to see if that actually, hey, when you take that $600 additional enhanced benefit away, do they report back to work as we're reopening? So that's going to be sort of that little science experiment we're going to see on a go-forward basis. Be kind of curious, but those are our updates for today. Thanks for watching and listening. Tune in next time, and we'll get you then. Take care.